Hello, everyone. Welcome to the Prospero.Ai stock market live stream. Good to see the viewers rolling in. Be sure to like the video. Today's market was a bit of a panic sell for most of the market, huh? Hope you guys are doing okay in your portfolios, managing today's activities and events. Well, we will get into all of the topics that we're going to be covering today, as well as I think today's beginning of the stream is going to really cover what's happening in the market today more in depth than we even usually do. Pretty big day. Obviously, semi stocks being hit hard, AI stocks, tech stocks. QQQ is down over 2.5% as of right now. So pretty bad day in the market. Um, but without further ado, let's get into the topics. So, like I just said, we're going to start off with the market. The semi stocks, Trump's comments probably played a role in what happened in the market today. We'll get into all the details surrounding that. Then we're going to talk about Roche getting into the obesity drug market. So, if you guys are longtime stream viewers, you probably know we've called out Eli Lilly as one of Prospero's favorite stocks. They're one of the leading obesity drug makers. Now there's another company getting into the mix. It kind of hurt Eli Lilly today. We'll talk about what that means for them going forward and maybe the obesity drug market as a whole. Before today, semi stocks were on a roll. They had been up over or just about 10% in under a week, which is a pretty crazy move. And that's the IWM, the index as a whole. So we'll talk about if maybe after today's events settle down, can the small cap stocks continue their rise, or was it just a quick pop and drop? We'll get into them in more detail. We have one of the smaller cap stocks to talk about, a story. It's a fashion company. They were the owner of Supreme brand, which they sold. I'll tell you how much, who they sold it to, and all the details around that story and what it means for that stock. If you haven't seen it yet, you'll have to stick around until then. And then before we turn over to the model portfolio update at the end of today's stream, I'll share a stat with you that actually could be broken today. We'll see how the trading day ends up. We're not too far away, but it's a crazy stat about the SPY, and I'll let you know what it is. And I guess we'll have to find out if we're going to break it at the end of today's stream. But what I want to do now is I want to check in the Prospero app the net option sentiment signals for the QQQ and the SPY. They were higher the past couple of weeks, most of the time being in high 40s, mid 50s, maybe even breaking into the high 50s. So let's check and see if those have changed with today's market decline. We'll first take a look at QQQ. Yes, so the QQQ is down to 44. So that is a decent decline. Just a few days ago, it was as high as 56, even 57. So over a 10-point drop we're seeing in the QQQ net options sentiment. Not the best signal of things to come. Maybe the QQQ will have to settle down a bit for now. And then the SPY is at 49. So it dropped less than the QQQ. Its peak was 55, so a 6-point drop for the SPY. So maybe we'll see a bit more strength in the SPY than the QQQ. What's also surprising today is the Dow has held on and been positive. I think most days where you see the QQQ approaching 3% down, it's usually we're usually seeing indices decline across the board. So to see the Dow Jones up 0.5% is very interesting. I think it signals the rotation that's currently underway in the market. I think a lot of investors are using the stocks that have done so well this year as piggy banks and kind of rotating into other stocks that maybe haven't caught as much of a bounce. I see a comment on YouTube from Saucepot Sassbox. SPY rebounding over the course of the day. Uh, Not in terms of the overall market as I'm looking at it, maybe in terms of net option sentiment. Is that what you're referring to? Because we opened up in the SPY at what, 5609, and we're at 5590. So even slightly lower than we were. Um, oh yeah, in terms of net option sentiment. So that's good. Maybe we're setting a floor of the SPY today, and maybe we'll continue rising throughout the rest of the week. That could be a interesting trend to follow if net option sentiment leads a little bit of a basing in the SPY and then a rise in the coming days. Be something to look out for. Um, let's see. Any questions for me from our viewers before George gets on the stream today? I'll do my best to answer concerns or questions you have before he gets in here. Maybe you want to take a look at some stocks in the Prospero app, some signals, uh, and even just comment your feelings on, how you're feeling about the market's actions today. Were you caught uh, by surprise by what happened in the markets today? I think we saw a little bit of a flash crash in the semis, which I think is what's leading the QQQ down so much today. Hello, George. Welcome to the stream. I was having a little powwow session with our
Oh,
viewers. Um, Crazy market today, huh?
I got it. Sorry, I'll be right back. I got to turn off this fan that's being too loud.
No problem. Um, I think for me, back to the viewers, it's going to be interesting to see how the day ends because I'd like to see some dip buyers enter the market at the end of today after such a fast-paced decline. So I think that's going to be telling to how the rest of the week might play out if we see any kind of dip buyers in this last hour of trading or not. But George, what a day in the markets today. It's kind of a bit of a flash crash, I feel like, for semis and AI and tech after the comments we got from Trump.
Yeah, it has been quite an interesting day, I would say. Um, like on a wide variety of fronts. Um, we're definitely seeing um, we're definitely seeing some, first we had this rotation, right? And then, as we were starting to get the hang of it, we had some nice gains on small caps on the rotation yesterday. And then right when we were starting to set in on this new market, um, another shift happens. And we made some moves in the morning for those that have our paid trading, like paid investing letter. Um, just because, we wanted to cover our bases. Some of those worked out better than others. And the big thing now is, you know, when something like this jolts the market, and our big thesis was like tech AI is going to carry. And we had no reason to believe that was not going to be the case. This really throws a wrench in it. And not only does it throw a wrench in because today you might have people basically like grading down these valuations, grading down how they might own these businesses because they're worried about either, more of this kind of talk hurting these stocks or more of um more of what I would say, uh, legislation that we might either be hearing about or people expect around this. So those are some big things that can fundamentally potentially shift our our thinking. One day is not enough. We said that last week. And right now there's just, I think, too much signal, too much change to get a good beat on it, which is why we kind of stop making moves for the rest of the day. We want to look at data. We want to get a beat on everything that's going on. We did see QQQ net option sentiment start to go down. So we might actually flip like bearish. And, whether that's, we see some small cap stocks being a little more resilient, some mid cap stocks being a little more resilient. Obviously, I think on the whole, the large cap tech exposure things are getting hit kind of the hardest. But it's something where we all have being a little more really small, a small cap kind of like chip pick that we had didn't do as well today. Actually, is one of the worst performing stocks. So there's some conflicting signals in the market. And when we see conflicting signals, our attitude and what we kind of recommend is to just hold and wait to see more. Now, if you're way exposed on the long side, I would strongly suggest hedging more, because that's what we kind of did, went pretty even long short. But if you're hedged, as you'd want, or you're feeling comfortable with that already, I just hold tight. This is a lot of data in the market, new data, and I don't think anyone really knows what's going on from the people I'm talking to.
Okay, firstly, your voice sounds good, but the camera is not working for me. If our chat could comment if it's just me or if you're also seeing George's camera kind of be blurry and laggy, that would help. So comment right now. Uh, but I can ask you this question that we got in the chat while they're helping us out there. Jonathan's asking, Meta still looks good in Prospero. Would you buy the dip or sit this one out?
I mean, I'm really going to just kind of default to what I just said, which is like, I don't think the signals look good in the let me see what I can do about the camera. I mean, you're sorry. I have like
Camera quality is awesome though, says Noah Lewis, but it is lagging. Thank you guys for answering. We'll try to get this fixed for you quickly. Good to see the usual and it's just I. George will probably be back in a second. Good to see the usual suspects in the chat commenting. Noah, Shane, Chris, Jonathan, and even Saucepot in the chat. So good to see you guys. We'll get you a good answer for your question, Jonathan, in a second. Although I think from just what George said in the beginning, if you could hear through the camera and tech troubles we were having, it sounds like he's going to wait to get more clarity on what's happening in the market, what's driving the markets, if the signals are going to change. I think just more clarity overall is what he's going to say for you, but we'll see. I know I saw a stat today that Meta had, I think, the lowest forward PE of the big cap tech stocks. So it seems like it's always trading at a discount to the rest of its peers. Although we've covered in recent streams how Donald Trump being president might not be the best for Meta.
I think we're good.
Yes, looking better.
I think we finally we finally have a process for debugging these speed things, I think. All right. Anyway, what I was saying about Meta was that essentially what we're looking at there is something where we pull back, because right now I don't think we really need to figure out, what new patterns form in the market. Like, granted, like with something like Meta, and what we kind of like about our long-term signals and why we kind of emphasize both long and short, regardless, long and short-term signals, regardless of if it's a short-term play. But the long-term signals were back tested for a year. So, we still like Meta for that reason. If you're looking for better price entry, or you're looking to say maybe add more, or quote unquote buy the dip, I would wait until we kind of have more clarity on market direction, what's going on with like SPY and QQQ net option sentiment. To me, that is really an important part of this.
So I was kind of going to ask you a similar question about the semi stocks today, which have been so well. They were kind of like the untouchable stocks in the market so far in the first half. And then we got the comments from Trump that kind of gave them a mini flash crash today. would you buy the dip on those, or are you going to wait to see the dust settle as well on those stocks?
I am trying one more thing on this because I'm still seeing the camera. So you're still seeing the camera slow down? I might just switch.
Yeah, it is. It is still lagging. It's a bit buggy.
I'm going to try one more. I'm trying one more thing. And then I'm just going to switch computers because this is um, all right. I'm going to switch. I'm actually going to try, I'm going to try a restart, um, a quick restart and then do it. But
Okay.
either way, I'm going to make the switch and then I'll come back and do this because I do want to have some of this filmed for some of the topics, but I'll go in the other room while this is restarting.
Okay. All right, chat. Just me and you. Sorry for the technical difficulties today. Um, let's see what some of you guys think, though. Do you think the market is overreacting to the news we've gotten in the last 24 hours? Do you think it was overdue for a correction? How are you feeling about what's going on in the market right now, specifically with tech, mega cap tech, AI stocks, chip stocks? I'd like to hear some of your thoughts. George, actually, I just throw him the questions, but it's usually his opinions and on these situations that we're getting. But maybe you guys could share how you're feeling about the market while we're waiting for George to join back in, and then it'll be interesting to see if he agrees with what you guys have to say about it. Also, I wonder if your portfolios are even uh, in these stocks, because if they're not, if they're in the Dow Jones stocks, you're probably feeling pretty good, pretty smart today, and outperforming the market.
All right.
Uh,
Get it sorted. How am I looking?
you are looking laggy.
Laggy still? All right.
Yeah.
I don't know what's going on, but I'll switch computers.
Okay. All right. So George is gonna join us in the Prospero laboratory, as I like to call it. But let's see, we got a comment. I'm most interested to see whether this is an opportunity to buy in on tech longs or not. Yes, that's what I was really trying to get after with my question as well. And I think Jonathan was thinking the same thing in his question. Is this an opportunity and an overreaction that we're seeing in the market today, or is this signaling that we're going to be in a different environment going forward? You know, these big cap tech stocks and AI stocks and semi stocks have been what has driven the market higher. Um, Everybody who follows the market was wondering how long they could keep growing and propelling the market. Maybe we're seeing the end of that, or maybe this is just a blip. But I guess we'll find out soon enough. Noah Lewis, market was running so hot, SPY 300 points above average Wall Street, end of year targets. Correction feels warranted, but the Prospero data says differently, so I'm a bit confused. Haha. Yes. I think a lot of people in this market are a bit confused today. So, George, it seems like our chat is mostly focused on wondering if this drop today, and specifically in the stocks we're seeing drop today, like the semi AI tech stocks, is it an overreaction or is it a sign of more things to come, that maybe the market is rotating and these stocks aren't going to continue driving the
Well,
market?
I think the rotation is different than I think QQQ net option sentiment is now at 45. SPY is at 49. I think if the question, and this is a good lesson on kind of like a macro thesis, right? If the question is, what could what could do well, what could get beat up, that's very different if we're talking about an overall bullish direction of the market and overall bearish direction of the market, right? We're less interested in small caps if there's an overall, kind of bearish direction of the market. And that's one of the things that we're trying to like evaluate. And, I wouldn't say the Prospero signals were, and this is why it's very important to use, kind of the individual signals as well as the, QQQ SPY levels, right? Because like, let's just use an example. They're all relative. Like, it's quite possible, Meta is still the strongest stock in the signals, but in a bear market, even the strongest stocks in the signals are vulnerable to attack. And I think Meta is a really good example because it did get beat up way too much. And that's how it ended up high in, Prospero signals. And it does still grow, third fastest of any of the Mag 7 stocks, starting to do a dividend. It's got some AI plays. Like, there's a lot of things to like about Meta and valid reasons for it to be like at 100. Now, could what happened last time happen where, sharks see blood in the water and they want to short Meta, make some money on the way down only to buy more, hold it long-term at a discounted price? Absolutely. And that's why it's always important to look at, market direction, as we say, SPY, QQQ, net option sentiment, which are going down a lot, especially in the last 2 days. They were kind of settled in the mid to high 50s. And, they're sending very bearish signals. And you'll notice this week, I moved the levels from 50 to be the bull level on both of them. So they're both below the bull level now. So we're definitely going in a direction where we're becoming less bullish. And, we sent out our first, bear screener in a long, long time today. So I think, if there's a difference between saying like, if this is just a blip, these are the stocks that we'd like to own on the bull side, and saying that like, oh, this is a bear market, we might need to evaluate things, especially because a lot of the times really great stocks that shouldn't be going down as much as they do in price get targeted, and institutions can gang up on them because in reality, they just like to own it at a better price. They see blood in the water. They see others shorting it. Does that all make sense?
Yeah, that makes a lot of sense to me. I think two more questions I have before we move on to some of our topics of the day on this topic. So, what seemed to propel the market lower today was Trump's comments. It's likely that he's going to be president in November. He seems to have a lot of controversial opinions. He's not afraid to talk. So, is this something we're going to see driving the markets day to day if he's elected? Once he's elected, firstly, I forget my other question. Maybe I'll remember it while you're answering that one.
Now, Trump, I would say, especially this election cycle, has proven to be pretty savvy with how he's doing everything. And as it's going, nothing but, like, I would say, improving his chances on a pretty steady rate. One of the reasons I'm saying, I'm starting to say, I don't know if I'm going to get bearish, is I would say one of the things that Biden has going for him is that the stock market recovered a lot this year. And it was kind of like pulled out from a bear run, inflation, got under control. And so, one of the things that could help Trump a lot is the stock market going down into the election. Now, I think on the other side, the Biden administration is going to do everything that they can to do that. And I'm not accusing anyone of anything. Just saying that, some of these things would be done by a savvy person that is, trying to, undermine the electability of the current regime, just as like the current regime often props up the stock market. It would kind of be the reverse to have like the challenger doing things to, kind of push the stock market in the other direction. Now, I'm not saying that is what is happening, but that is what a savvy person might do. He's proven to be very savvy. And so that's making me really think like how safe I can really be in a long portfolio. And kind of what I've been like, I've been starting every week pretty equal long short, just because I've known all of these risks, could be on the way. And there's a lot of like, especially when you have someone that like Trump that likes to use social media, likes to have like a lot of direct contact with people, make direct threats to, organizations or countries or anything like that. That creates a very risky market that could be risky otherwise, just because of, some of the macroeconomic forces we talk about. But yes, I agree. I mean, he might be seeing, he might be pushing for like a 0.5% rate cut right now, just to kind of make sure that the stock market is, staying healthy, because that is one of the, I would say one of the only things Biden has going for him at this point. And it's one of those things that we'll see how much, the administration can get in like Powell's ear, because I remember him coming out in support of, when the bank, that little like, what was it? Silicon Valley Bank, like mini collapse, he came out and he kind of reassured and said something about rate cuts there. So it would look like a counter move if we heard from Powell, soon about, more or larger, rate cuts leading into the election.
And so I did remember my other question. We have been making like new all-time highs basically day after day after day, and this is the first real true down day. So we're still not far away from them. Heading into earnings season, is a little pullback before it possibly a good setup for earnings seasons, where these companies maybe bars could be lowered a bit for earnings expectations, and we'll have some better reaction than we would have had if we were just crushing into all-time highs on the way into earnings season?
I mean, I hate to be a broken record here, but I would say that a lot of it is going to depend on, how I would say these next few days, week, 2 weeks play out. If we're heading towards a bit of a bear run, and this is sustained, perhaps there's like, we might hear from China on this, which would really escalate things. And this is the kind of thing that China responds to as well. Sometimes they respond to it by like hacking into our systems, but sometimes they respond to it directly. So if we're like heading into that, like I think what we're going to see is, yes, companies that do report good earnings and good guidance, like especially for something like Nvidia, like they, their second best quarter ever 2 quarters ago, and like again one of the second best quarter probably I've ever seen. They were down for the day after like a 200% increase in their sales. So they were down for the day because they warned about China. So I think what you're going to have to see, I would say, especially from tech, especially from chips, you're going to have to see a beat and, guidance staying, where it is at least, like, or like, I think even if you hit earnings, we might be heading for a market, especially on the tech side. Even if you hit and you have the same guidance, that might not be enough to save you from like this bear run continuing. It is one of those things that like just to watch out for. And one of the reasons we're saying like hold, see more data is just because like it's very like, as someone that's worked on the modeling AI side, it's very hard to model something like what Trump said. So you could just be getting something where there's a sell-off and then everybody being like, okay, well, has the risk on what he said been baked in? Because we don't know exactly how to model sales. And a lot of these, ultimate like longer runs are built off the top of modeling. So if they don't have enough information to change their models, this might just be a news event hit and we might be coming back tomorrow, right? QQQ net option sentiment obviously is like saying, higher on the risk factor, but at the same time, on a day like this, I would expect it to go down. But yeah, we absolutely have to keep looking at the data. I will tell you this: if it goes down more and or we see bad price action again tomorrow, I will be almost certainly flipping both my investing and trading portfolio bearish. And I'll probably flip right now. I think my investing portfolio, my trading portfolio is a little more bullish. So I will flip it neutral today at the very least.
All right, I think that was a pretty good summary of our feelings at all of the forces that are currently weighing on the market. Hopefully all of our viewers feel a little bit more clear about how to feel about what's going on in the market today. I want to turn over to our first story finally, but I think that was an important first half hour. I think it was good for everybody to see. We had a company, Roche, with a positive study, and they're entering the obesity drug market, which kind of weighed on Eli Lilly and Novo Nordisk, two of the leading obesity drug makers.
I'm going to see if it works. I'll be right back.
Okay. Can you hear me or no while you're gone?
I know the story.
Oh, he knows the story. Okay. So what George is going to answer is, what was funny to me when I saw this story, I feel like it's kind of like the obesity drug market is becoming like the streaming industry where there was a clear leader in it. There was a winner. It was a good thing for a company. And then all these other companies want to enter the market and it becomes oversaturated. And now you have all these streaming services and you have all these obesity drug makers. So it's kind of funny. It's like you can never have too much of a good thing because people will just, greed wins the day. But when George comes back, I think we'll spin to thinking about Eli Lilly, which has been one of the better stocks in the Prospero signals, but also, reacting to if the obesity drug market and streaming actually have something in common, which you probably didn't have on your bingo card before this stream. I see a comment from Noah Lewis. Thank you, George. That was really insightful. I will answer for George. You're welcome, Noah. But I'm sure he'll react to when he gets back. Maybe we'll be on the good cam setup where we're hopping back and forth today. You never know what you're going to get with the Prospero.Ai live streams. Nope, we're back in the same spot.
I feel like we didn't get good footage on Monday, so I'm trying to get some good footage with the good thing. But yeah, so I think basically, as you were talking about in terms of like market saturation, like I think this obesity stuff, it makes sense right now in the current format, kind of like a limited supply, a limited number of people, and like unless you have diabetes, basically having to pay, a pretty penny to get access to it. So in that limited thing, I can see this as a risk factor. The way that I look at it, and I certainly would say like on the longer time scale, I'm less worried about it. Just because like we know how healthcare works in America. And how healthcare works in America is frequently, whether you're a drug manufacturer or a hospital or an insurance provider, your profits go up and up and up. And that, that's one of my basic problems with, the healthcare system. And even like, a company like UNH being a public company, because their profits have to go up and up and up. And, that's how you get things like people eliminating pre-existing conditions and things like that. Because as an insurance company, how do you make more profit? You like cut the people that are draining your resources the most. So we do know this. Profits go up and up and up for the healthcare industry. And, one of the things that I think where risk might be overblown, of course, like watching that option sentiment, you don't want to get caught on a downtrend. But in terms of owning Eli Lilly longer term, that's one that we talk about all the time. We love it longer term because they have a great innovation program, even beyond And, they were very quick to bring Manjaro to the market after Ozempic happened. And I don't know enough about history to just know that it was in the pipeline. They said, we better start building this too. But obviously that's very smart, in addition to a company that is very good at making their own drugs. So I say all this to say I can't see a world in which these aren't, there aren't more ways to get insurance to cover these weight loss drugs. And I would say that's the other side of the saturation. Yeah, we might be seeing some saturation, but we might also be seeing more entrants into this market because they expect more sales and they expect sales to inflate for everyone. And by the way, that's one of the reasons I really like Eli Lilly, one of the tangible value reasons beyond me just liking their innovation program, because I do believe that it's only a matter of time before, these weight loss drugs are covered for more, things than just diabetes. There might be some other things, but I think there might be things more on the way. And the thing I'm really thinking about is HGH, right? And HGH, I think, used to be just for certain illnesses or something. I don't know where it started, but I do know where it started to go, because I actually know someone that got it because they were just short, and they wanted it. And basically they made the argument that they should get it because they were short and their life would be helpful if they were taller, which I think a lot of people could say. And I kind of thought that was funny. So what I'm saying by that is I really think it's got to be only a matter of time before people just get it if they have a certain body mass index, or if they have a certain risk of heart disease or whatever, which by the way is smart. We need more preventative care. And I'm kind of someone, obviously I don't love our healthcare system. People that watch me for a long time know that. But I'm definitely someone that of all the things I don't like about, more profits for all of these players in healthcare, if those profits are in the service of reducing the obesity epidemic, that seems like a win for a variety of parties.
Agreed. Next stock I want to bring up today is one that's been hit hard over the past year, VF Corp. There was a story about them today, how they're selling Supreme brand to the owner of Ray-Bans. That company is called EssilorLuxottica. Supreme was sold for $1.5 billion, which is actually a loss. Just 4 years ago in 2020, they purchased the brand for $2.1 billion. It was kind of the odd man out in their portfolio of brands that VF Corp owns. You guys probably know some of the other ones. They have Vans, North Face, Timberland. I'm wondering if that's a clear sign of trouble that, just 4 years after they purchase a brand, they're willing to sell it for a loss, and what owners of VF Corp should think about that. Or maybe the management is realizing a mistake quickly and should be patted on the back. So it's probably one or the other. But we'll get the answer for our viewers when George is back. After this topic, we have just two more, and we could probably go through them quickly before the model portfolio. We got TriCam set up.
All right. Did this finally work?
It's still laggy. I don't think it's working. It looks clear, but you're just your movements are lagging.
All right. I thought it was a Windows update issue. I think I'm going to give up for good. Yeah. Okay.
This is the problem with technology, people. The better your technology is, the more trouble it gives you. It's like that saying with the cars. I forget which luxury car brand now it is, but it's one of them, Ferrari. It's it just requires so much maintenance. It's always going to be in the shop, but your Ford or Chevy or whatever, is at least going to be reliable. More so probably Toyota. They seem to last forever. But okay, George is back. Oh,
Okay. All right. We're throwing in the towel. Thanks for your patience today, everyone. I really I didn't want to leave the good setup 2 days in a row, but if we must, we must. All right. So give me so we did, sorry, just a recap of the last topic.
yeah. So VF Corp sold Supreme to the Ray-Ban owner for 1.5 billion. They bought it 4 years ago for 2.1 billion. So just 4 years later, they're selling it at a loss. I think that's a sign of trouble within the company if they're willing to do that so quickly.
Yes. Like, I mean, well, some things it's like when you have an acquisition, sometimes it can be trouble. Like what are like of the themes that we talk about? It could just be worries around retail sales and kind of getting out, like even at a loss before it becomes like a bigger loss and it's harder to sell. Like the one other thing about like acquisitions, things like that, sometimes it's just not a fit. And you never really can underrate that. Now, it could be both, right? It could be that it's not a fit and they're worried and it's like a variety of reasons. But, it can be very tough to make acquisitions and meld cultures, and sometimes they don't. And, there's got to be at least some of that, because I would say the other thing, and these things are kind of all intertwined, like unless you get a good culture mesh, I'd say especially with the management teams, like you're not going to have that acquisition, improve. And you really need that, because like a big thing about these acquisitions and why people do that is they say, okay, if we have a little more money, maybe economies of scale, overlap in things like advertising or sharing, marketing teams. There's like a lot of different things there. And then you might realize that, where you thought marketing would be more efficient, you're stepping on each other's toes. Or like where you thought, the ex-CEO probably just like the leader, the leader of that unit, or maybe another leader, you thought you would mesh very well. They'd like a lot of your other ideas. There's a lot of like, interpersonal things. So, I would compare it to, you have good interviews, right? Maybe interview process. Then you start the job and you realize that it's not for you. And you didn't like, everything you thought it would be, it isn't. So acquisitions are just like that too, except kind of on steroids, because basically there's so many more people and so many more interconnections that need to mesh. And a lot of the times, whereas you're in an interview, you're probably talking directly to the people you're working with. In an acquisition, maybe you'll talk to, like 10 people at the company, maybe more, but you're talking about a lot larger of an integration. So yeah, there's going to be a failure rate. And what you do have to commend, and I would say I'd say it's a sign of good management, if an acquisition is made and they're willing to get rid of it even as a loss, instead of kind of what you can see some management teams do, which they'll like run it into the ground and then have to sell it on pennies on the dollar. Because like, let's say we're talking about like a team not meshing, right? The team doesn't mesh. And then, sooner or later, a lot of the talent of the company that's acquired leaves more and more. That makes whatever existing, like, of operating efficiency or operating success get worse. And then you kind of, that's when, the talent's drained and you're really like, kind of up shit's creek in terms of like what you can take for the company, because the company isn't even the company you acquired anymore because the talent left.
That makes a lot of sense. So it sounds like it's a blend of maybe the management is realizing the mistake quickly versus making the mistake in the first place, and where that line lands. I think it's about time where we should do our switch over. Do you agree? I have one more topic, but I think I could just
Yeah, you can do
help.
one. I think it could be pretty quick for the model portfolio today. I
Okay, yeah.
don't
So
want to
this,
make too many moves.
because we're going to be waiting on data. But okay, so this was one stat I saw that when I saw it, it was pretty crazy. So the SPY has gone 350 trading sessions without declining 2%. Today we're getting close, but I don't think it's going to happen. We're at minus one and one third percent right now. That streak is the longest since 2007. Does today's activities signal that we might break this 350 session streak we have going right now?
I mean, where are we at right now?
I think it's going to be
134.
tough
Oh,
to
it
get
looks
there
like we're
today.
definitely going to survive today.
Yeah.
But yeah, one of the things why I'm going more neutral, I'm already more neutral in my investing portfolio. We could easily see a bigger red day tomorrow. So I don't want to overcorrect, but I'm definitely going to even out my long shorts because we could see it tomorrow. Like how these things tend to happen is, obviously there's today, there's the news event. And then what's going to happen between like now and, probably tomorrow morning is a lot of institutional people are going to call around to each other and say like, how are you feeling? Like, is this a dip? Like, how seriously do we need to take this? Can we expect more of this from him? Like, probably like, do you know anyone in China we can talk to about like if they're going to make a counter call? And that's why I always say look at the data, and why I'll be looking at net option sentiment at open above all, because it's going to take that to kind of get like all of that integrated. And like why, by the way, we suggest the approach that we do, because like nobody really has the ability. Like, I say a little bit, like I'm going to ask some people that I know too, like, and I have access, but like I don't have nearly the same access as someone that's like very senior at a large fund that's going to call around to like their counterparts, and they're always taking each other's calls because they want to exchange information. I have like sources here and there. But the only thing that we could do are like, sources in China, right? Like the only thing we need to do is like watch out tomorrow to see how those people with those knowledge bases are going to play it in the options market at open. And, sure, they could be doing some of that research now, and that's how we're doing it, but they really do. And a lot of them, I would say, need to know what is like going on, especially with the algorithms, right? Because even if, say, you call up the head of BlackRock, right? And you say, BlackRock's a bad example because there are a lot of like ETFs and they don't necessarily trade on as fast as timeline. Say you call up the head of, 0.72, Steve Cohen's fund, and you ask like what the algorithms are going to do at open, right? They might have some idea. They might see what's going on, but like they probably, especially how nonlinear those equations are, they probably won't know exactly, other than like they could be like, I could tell you right now, they're trading, these look like the levels, these look like the levels they'll buy. But like news happens overnight, and a lot of them run on news and like social sentiment around news, right? That's all happening overnight. A lot of new data is coming in before the market opens, when the market opens. So, the algorithms can't necessarily give you like the answers. And that's what's very different about the market than it used to be. Like the way it used to be was what I said. All of these large managers, they could call around to each other and they'd know exactly where their money was going to go tomorrow or what they were looking at. And it would kind of be easy for people to even do that, make bets. But like, now with all the algorithms, it's like people don't necessarily know, other than like their discretionary what they're moving on their own, and they need to see the data. The algorithms need to see the data. So that's one of the reasons I say I need to see the data because we are a bit behind them in terms of like I'm saying, I need to see the net option sentiment, but we're ahead of pretty much anything else you're going to get as a retail investor, and that's kind of what we do.
That is fascinating that even the people that work there don't exactly like 100% know what the AI that is at their company is going to do. That's pretty crazy. The AI is running itself.
Well, it's a combination of like, like not necessarily knowing exactly like how the code is going to run, because a lot of them are like genetic and kind of adaptive and fast. And the other component is just that like there's a lot of data that's going to come in before that, right? So it's both, but I agree. It's a really big change from how it used to be, and like exactly why we built this the way that it did, because like, for all of like the disappointment that hedge funds, get better data, have better context, blah, 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 that always existed. But now that they're, so dependent on algorithms are much easier to like, grasp at and visualize their behavior than people. And that's, kind of why we built this the way that we did, because we were kind of capitalizing on that trend.
Mm-hmm. So now I can't wait to see, is tomorrow going to be a gap up or gap down? I feel like it's going to be one or the other. I doubt it'll open exactly at where we closed today, but we'll have to wait and see.
Yeah. Oh man, I'm just like looking at tech. What a bloodbath. Oh, I got to start sharing.
How about the lowly Dow Jones though, ending the day in the green?
Wow. I mean, this is like they were waiting for this day. The Dow.
People who are retired are very happy today. That's who the Dow's shareholders are, right?
Can you tell me what the QQQ and SPY and option sentiment is?
Mm-hmm. QQQ is at 44 and SPY is at 48. The flippening has occurred. It's really hard to know what to do with tech because it could recover tomorrow, but we have been trimming that down, and it is time to get even more defensive. As for targets, you may want to look at energy, real estate, financials on the long side, but honestly, we need to look at more shorts, and that might be consumer discretionary and healthcare, with a dash of technology and communications.
What did you say on these option sentiment things?
SPY is 47 and QQQ is 44.
Damn, look at large cap growth. All right, let's see what to do with this mess. I think Tesla might be the only thing that. doing better. Okay.
Thanks for tuning in, Nissan. Better late than never. Glad to have you in the stream.
Okay. How is the net option sentiment trend on CCOI?
Trending higher recently, but it did dip down to 27, but it's up to 40 now.
How about Colm?
Colm is at 30 currently, after dropping all the way down to 14 at noon.
Where's the letter? How about KSS?
KSS is at 20. It's dropping, downtrending. It was at 18 at lunch, 20 right now.
Neither of those are what we want. How about IAC? Never mind, we're doing it.
Yeah, down to 10.
been all over the place. We're taking the risk. What's going on with UAA? Never mind. What about AZTA? Oh, yeah.
AZTA down to 20, downtrend, near the lows.
All right, we want to get this out. I think that. I think IAC was the one with the good trend down.
Yes.
All right, maybe one more. Okay, that'll do it. All right. Happy to put a cap on this day.
Yes, gone and it's in the past now. I think the content was probably really useful for the viewers. So thanks everybody for tuning in. George, time for you to go make some calls with your connections, right? See how the market's opening tomorrow?
Absolutely. Maybe find someone in China.
Yep. All right. Hopefully we have a good rest of the week in the market, and we'll see everybody back here Monday. Bye for now.
All right, thanks.